Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for September 8th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What we see right now is a little bit of weakness starting to come in above the 2186, 2187 zone. Prices probed higher in pre-market trading here, and we're not able to really establish any acceptance above 2188.5, which is the 50% expansion from the edge of the key range. We also have the top of this key range right here at 2186.75. Prices tried to hold below the bottom of the key range, rejected, which led a move all the way across. Now we're seeing a failure to push prices beyond that area, which could imply a push back toward 2172 in the near term. So right now we're still trading within the boundaries of this clear range. Right now the expectation is for responsive sellers to come in and return prices from rejection back toward value and perhaps across the range. That's the early expectation right now, especially if prices cannot establish acceptance above 2187s. All right, let's drop down to the intraday time frame here. We have ES on an intraday. For the most part, prices pushed up to these highs here, rejected off the R25 PivotBoss pivot. That's the 25% expansion of the previous session's range, and then dropped right back into the actual pivot range for the day. So right now, if this is going to be rejection above 2187s, then the expectation would be the next bounce would likely begin to form resistance off that area. So we're going to watch for some sort of resistance to develop around 87s, which could lead to a push back toward 2177.5. All right, let's take a look at crude oil. Let's bring up a regular chart for it here. All right, what we have with crude oil was yesterday finished with a very, very strong rally. Big time push up. As a matter of fact, price rallied all the way back above 46's closed and is now holding in that area right now. So that's a pretty significant push that we've seen there. Back up into the tail of the previous session's range. We still have a major area of resistance here at 46.50, and that's just below where we are, or just above where we are right now. That's still an important area. One thing I've noticed is if we hide some of these key ranges here, one thing you'll notice here is that prices are coiling up significantly. There is a major coil going on in a larger time frame here, and what you're seeing is prices building energy perhaps for a major breakout move, and that's this coil right here that's happening. So we've seen this thing kind of develop and is now doing this with very clear and potent reversals off the edges of this range. Anytime you have decisive turns off the top and decisive turns off the bottom, you usually see price really gearing up for the next major move. So we could see a little bit more development within this range, and then eventually, once we see a breakout, it could be significant. It could be a move that is between 10 and 13 handles, as measured by the back end of this range, which spans from 39s to 52s. So that's going to be very important once it gets there. At the moment, we could also bring up a larger key range here, which we can do down the road, so that we can see which are the best levels to watch in and outside this range. All right, now if we take a look on an intraday basis, one thing to keep an eye on again is that 46.50 level. That's the important level there. You can see it right here. You can put a key level right there as well, but this is from previous trading, 46.53 being rejected, and that was previous lows before that as well. So it extends into last week. Right now we're forming a clear range just below that zone. You can see right here. And I love when we form these ranges because after a big rally here, if these late bulls to the party don't get paid up here above 46.50, you're going to see the stops get run right back to value. They're going to get run through the previous close, and they're going to get you right back into 45.07 and our 45 key level. So be watching for any signs of rejection around 46.50 here. If prices can't go, this thing could be faded perhaps back to 45s. All right, let's take a look at gold futures. This one here has had an aggressive rally over the last few days, and what you're seeing right now is price hold after the recent rally. So this is the range that we've been following. Obviously 1306, big time level that we called out yet again. And that rally, boom, 1306 to 1356, that was a big time move. 50 handles there, straight away, and mostly in 3 days. Much of it happened in 2 days. And even right now, we're still holding above 1340 here. And what I mentioned was after this big rally here, you know, if this thing pulls back toward 1340, you could give it another go. But for the most part, for all intents and purposes, this trade is pretty much done. You may be able to see a little bit higher, but remember, we're seeing lower highs out of this thing. Lower highs here, 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 and here. We were never really going to test 1365 or 1375, at least on the first move. The idea was to come right into that zone, a little bit more shallow than where these were, and that was pretty much it. So this was the bulk of the move, and right now we got to see what happens next. I still think that any pullback could be a short-term buying opportunity to try it again, but failure to hold 1340 opens up a retest back down, because this is a clear trading range, and we continue to build out within the boundaries of this range. All right, let's take a look at the MQ here. The MQ, this one in a daily time frame, is holding above the top end of its key range. Here's the key range, 48.17.5, the low, 47.57.25, and right now it's just trading just above the top end of the range here. And that's important, because if these late bulls, again, aren't able to keep prices above that 48.17, then the early idea is that you return back toward the midpoint of the range with a shot at rotating across the entire range. So this is something to watch out for. We have an inside day developing right now. Again, 48.20 has always been our key level. I mentioned price can get above that 48.20, but if it starts to mess around and not print new highs, then when the stops come out, there's going to be, as a result of breaking through that 48.20 and running those stops downward, back toward 47.90 and 47.57. So we could be looking at much more movement ahead if this 48.20 can't hold. Now bulls want to keep that area bid. Here's the previous high, 48.17 half, 48.20. That zone right there is where bulls want to keep bid for a shot at seeing an extension higher. The next two upside levels bring you to about 48.52 and 48.69. All right, let's take a look at the intraday time frame. We'll finish this one up. Here's the intraday basis right here. On an intraday basis, you can see again, prices rallied, this time just shy of the previous session's highs over here, but already rejected above 48.35 again, and is coming back. The key level again to watch is going to be here and here. Yesterday we went below it, tried to hold, and failed, and formed an absorption signature that led to a rally. So right now we know that this is an important area. Overall, bulls want to continue to defend it, but as soon as they give it up, it could be a quick move back down. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.